Welcome to my YouTube channel, and today we are going to talk about day trading. What is day trading, and or do you prefer to invest in the stock market? Other people can do both. So day trading. So I've introduced this part into my stock market activities that I want to be doing day trading. I'm still learning, and but there are some of the things that I've learned that I feel like they are applicable, and you should know them too. So if you're new to this channel, please subscribe for more videos. Focus of today will be more on what is day trading and what are the strategies. So it's going to be a short video, and I will tell you out of those strategies, which one do I use and why do I use them, because we are doing day trading. What is day trading and what are the strategies that we use for day trading? So this is the process where you buy a security and you close it before the end of the day, where you just hold it for a day. You don't keep it overnight. You don't keep it for the next day. So it's just like for a short time period during that day. So it's a form of speculation in securities in which a trader buys and sells securities within the same day. So that's why they call it day trading. It's not like swing trading where you have to carry it overnight or even for a week or for a month. So this is within the day. So what are some of the strategies that you use or people use when they are day trading? So these people, they don't really focus so much on fundamental of the companies and what is going on with the product or services. They only follow trend, the price action, things at the moment. So what is really affecting the stock market at the moment? That's what they really focus on. Is more of the emotional driven at this stage of day trading. So other people, they look at the price action. They study charts to identify patterns and predict the direction of an asset price. So let's say, for example, they bought a share and then they study first and try to analyze like what happened when and why should they buy that, and then they look at the charts. So some people, they will look at how far did the stock went in the previous year, days, or week, and then they will use that to predict what will happen if they buy the share. And other people will just go go buy long, or others will go short. So the one that will go long will buy the share lower and then sell when it rises. The others who predict that the price is going to go down, so they will buy it at higher price and then later on sell it at the lower price. So, and in both way, people make profit depending on which strategy do you choose. So price action is one of the strategies that people use. They just look at the price, look at and try to predict the direction of the price, whether it's going to go up or it's going to go down. And in both way, those who are waiting for the price to go up, they buy it at a lower price and sell it at a higher price. And those who are hoping that the price is going to go down, they buy it at the higher price, they sell it at higher price, and then buy it back at the lower price. So another strategy is scalping. So this one is the one that they combine fundamental and technical analysis to take advantage of small prices change in the market. And the position is traded within like maybe a minute or a second. So it's really very risky type of strategy. So some people, they will go there with like maybe those who can afford to lose that much money, they might go and take big position and then take advantage of that small change in the stock price, and then they will make big profit. So these are people that you feel, you hear that they make maybe 7,000 and within a minute, because they have that much money that they want to invest there and take advantage of that small change in price in the market. because the position is barely a minute or second. And you have to have a must have an exit because it's very risky. If anything happen and then it has to go the opposite direction, and then you might end up like losing all the money that you put there. So it has to be like done by people who are more experienced in trading, and maybe they feel like that money, even if they lose that money, it doesn't really matter that much. So those people have that experience and they do it with their calculated risk. Another one will be more of the trend following. So we have already looked at the price action, and we are now looking at scalping. And then the next one would be more of the trend following. Other people just follow the trend, and these are the people who look at the candlestick, the charts, so they follow the trend. So how is it going? So those people like look at the chart and then they try to study the chart. So what happened when this pattern shows? What is going to happen when this pattern show up? When what happened during like consolidation? So all those things they have to follow and see and try to predict if the price is going to go up. At this point, you don't even need to like study about the product, about the service, because what you are really looking at is trends and then price action and how long are you going to stay in that position. Following trends and riding market momentum. So it's like once you see it's just really going, making highs and lows as it goes up, or maybe making highs and low as it goes down. So you will ride that trend and then try to make profit as those small prices changes happen. Traders also look at the volume indicators to go long when prices are rising or go short when the prices are falling. So this is really a good point, like the volume indicator. Some of us who don't have much experience in trading are this one. So I always look at the volume indicator, which is also applicable to economics. So like the higher the volume of people who are buying the stocks, so it shows like there's higher demand at that point, and the price, the probability is that the price is going to go up. So some people look at the volume. So now we have already looked at the price action, the scalping, and then now trend following. And the next one will be more on a trend too. Which one will you choose to experiment or try to learn? Because sometimes it's good for you to choose one strategy so you don't get confused and really master that and then use it for trading. The counter trend trading is another one. So this delivery placing trade against current trend. So let's say the trend was going up and then you decide to place it on the opposite direction that might go down. It banks on the asset value reversing its direction or settling at the price point that is more stable. So I think this one is for people who really follow trend too. So it might be like, okay, so the price is now going up. So, but you somehow place it at the opposite direction. This is maybe you taking chances that either way, the price can go either way. It could go up or it could go down. So that one is another form, that is the counter trend trading. So we have already checked those one about the strategies, and so far I think you have started making up your mind on which one would you choose if you had to choose one, so you can use it for your day trading strategy. Most of the time I use the news, and I also use the price action. I use the price action, and I sometimes use the fundamental, especially when I'm doing the swing trading. So the swing trading, because sometimes you keep them overnight, so it should be like a really good company that you know they are really having good product and doing some businesses. So fundamental trading is another strategy that other people use to. However, this one is not so common with those experienced day traders that do not want to waste time, go and look at companies and financial statement analysis, all this stuff. So use fundamental analysis, looking at the economic indicators and financial figures to arrive at the buy or sell decision. So these are traders that look at maybe this is the company, these assets, they have this asset, they have this liability, this is the earnings, and those shareholders' earnings, and this is how they perform previously, what will happen when they, like those people who wait for the company's earnings, the quarters, like monthly, those things. So those are the traders that use that strategy, fundamental trading. And the next one and the last one, which is the news strategy. So other traders, they look at the news. What is the press talking about this company? So is it good news? Is it bad news? And how does it really affect the stock price of that company? So most of the time I look at the news, right? So if they say something negative, the probability is that the price of that share or that company is going to go, the stock price of that company is going to go down. If it's a good news, maybe let's say they have acquired this company, new company, this is how they expanding, they have a new product, all those stuff, and then the probability is that the price might go down, up. For day traders, a news event can be a source of valuable data, so you have to look at it some time. Although day trading mostly is reliable on the trend and the price action, sometimes the news can also influence like how the price move during the day, like new product, the industrial rumors, like what are they talking about this company, and then what are some of the big investors that have invested in this company, all this stuff. So the news is also one strategy for day trading. So, and that is the end of the video. If you like this video, please subscribe for more videos, and I will see you next time. I really appreciate your support.